May profits be upon you. Uh, there's a move happening right now, and I want to make sure you catch it. All right, let's take a look at Euro USD. Euro USD. We're gonna do some top-down analysis right now. We're gonna start at the daily, right? Uh, give me extend me some patience as I walk you through this. All right, what we have is a very definitive kind of downtrend. All right. And you can see that we are breaking structure to the downside, right? And we have come into a larger uh, weekly zone of demand all the way over to the left. You'll see it. All right. And we have responded to it. Okay. And that's important to note that we've entered into a larger, higher time frame zone of demand, and we have a response to it, right? And we can see that we have an internal break of structure here. Let me get rid of that. All right. Uh so as soon as price breaks this high, you want to see how it responds to the demand zone that is left behind here. All right. And you could use this as well. All right, but this low may be used as inducement as price comes down and then responds higher. The deal is looking at this time frame and looking at the price action after a break of structure, after a break of market structure to the upside. You want to see that the low holds or not. I expect the low to hold, all right, because it actually broke structure. So there is some strength to it, and it's responding to a higher time frame zone of demand, right? There is inducement here. I mean, not inducement, but liquidity here, liquidity pools, and price may be going for a higher mitigation of this higher zone of supply. So, and we are in supply right now. Look how price came up in that supply two times, all right, to mitigate, all right. I'm looking at this as weak, all right, especially after a break of structure to the upside. So I'm looking for price to eventually come and correct this move. All right, let's look at the 4 hour. Okay. Now I want you to bear in mind, I got two EQs up here, right? EQ is the midpoint of a trading range. This is the daily trading range. That's what that EQ is, and that we have already gone into premium pricing as opposed to discount pricing. All right, we've already gone into the daily premium price of the range, right? And we pull back. All right, now we're hitting all of this support here. Boom. All right, and we're back in discount. All right, that's the daily. All right, keep that in mind. Now, in this leg of structure, this is the EQ, and we're barely got to the 50% of it. All right, I believe that we will make a deeper penetration into it eventually. All right, and what am I noting? I'm making note of this break of market structure to the downside. All right, but this is a pullback after a break, after a this isn't a pullback, this is the impulse, but after a break of structure, you expect that pullback to come. And it's at that point that you have to decide, oh snap. All right, prices in my wheelhouse right now. So what we have to look at is the demand in this leg of structure after a break of structure to the upside. We're looking at the demand in this leg, and we have to decide which one of these will hold. Well, we have some good candidates, and we've already it's already given us a break of internal structure. All right, so the pullback is on, right, on and popping. But what I'm going to look at is, all right, this is the swing low on the 4 hour. This is the swing low, right, and it's pretty strong because it broke structure to the upside. So I expect price to definitely hold when it comes here. I expect price to hold here. What about this one? All right, this one is reacting off of this one. All right. And look how long price messed around here. All right. We have a demand chain. I don't know why I don't have the whole chain highlighted there. I don't know what just happened. Hold on a second. Okay. I'm not sure what just happened there. All right. So I have a chain here. There's a missing link between here and there. I don't know why. All right. We can just put that on there real quick. Come on, man. Right. There you go. Right there. All right. So we have a demand chain going up. Prices coming back into this demand chain on the 4-hour. And we want to check that out. Mute that. We want to see how price responds here. Do I expect this low to go? I don't expect it to go, but I'm looking out for it to go because it's I'm not sure how strong it is. I'm really not, because this is a range of price, and you're looking, when you see a range of price, market makers like to manipulate the high to sweep for liquidity, manipulate the low to sweep for liquidity, and then you expect that next move, whether it's going to be up or down. All right, the real move. All right, but it's going to generate orders, generate liquidity before it does that. All right, so you see the manipulation of the high already here, right? You see the manipulation of lows here. All right, could we come down, take out this low? All right, and mitigate this unmitigated zone down here. There is an extreme 4-hour within the daily demand zone here. So I think this would be a great candidate, and this is a place where I want to take a long position, because we are, again, remember, we are in the discount area of this trading range. All right, let's go down to the 15 and take a look. All right. All right. I don't know why I'm not showing it. Okay. All right. Now, in the 15, let's just get down to business, because price is moving. We are right now responding to this demand zone. I have an expectation that this will hold. And so far, we're having a positive reaction here. You know, it looks like price may go up, and I'm looking for price to take out this weak high. Why do I call it a weak high? Because it did not make a new low as yet. All right. And this is, I consider this strong because it broke structure to the upside. Okay. So this is a break of structure and a return to impulse. And we can look at this area as the origin of the impulse. And I'm expecting price to hold. And we have some evidence of that, right? So what am I looking for now? A break to the upside. All right. And I would be going down to my 1 minute for an entry, looking for an entry. And what am I looking for? I'm looking for, come on, man. Don't do that in front of company. All right. I'm looking for, I'm looking for our entry model down here. And I'm looking for this longer climb up. All right, I'm looking for that high to be swept. I'm looking for this high to be swept. You see a dollar sign over there, dollar sign over there. All right, I'm looking. All right, I'm looking for this to hold, and I'm looking to target this high. All right, a 15 minute target from a 15-minute zone. All right, I'm hoping that's pretty easy to understand. Understand this. You see these lines here? This is the 4-hour zone, and this is the 15-minute extreme within this 4-hour zone. I'm looking for this to hold. Got it? And if it is broken, I'm looking for price to come on down and take these lows down here. All right. This is a 4-hour zone. I'm looking for price to take these lows out here. All right. But if price does break this low, I'm definitely switching my bias to because this is a swing point. And I'll be looking for shorts at that point. I'm looking for this area to hold. So it's going to give us an opportunity here, I believe. And just based on sensitivity, based on a reaction, we can get price to give us what we need. All right, just go down to the 1 minute and we'll have enough range to I believe that we'll have enough range to look for a long position here. All right, that'll give us 15 to 20 pips at the very least to get a 5-hour trade. All right, but I am looking to hold this until it takes out this high, which looks like good inducement to mitigate this zone. All right, and quite possibly eventually we'll come up here. But understand, we have FOMC tomorrow. Banks are moving into position, all right, for a great discount. And I believe the larger picture is the correction of that CPI data candle. All right. So all of this, we're still in the range. It's very, very, this is, you don't want to take a trade. You really don't want to take a trade in the middle of a range like this, because price could go either way. It could go deeper, it could go high, it could turn on you in a moment's notice. So be careful with your entry. We're coming close to the other side, the low of this trading range, but we're still in it. And I caution you to wait until you get a great indication that price wants to go up, and you already know what to look for if you've been watching my videos. All right, we're coming down to this is the area that you want to take trades from at the extreme ends of a range. Taking it from the middle is not recommended at all, but I'm going to be looking forward here because we're close to the end and I'm expecting this zone to hold. All right, if we start getting down, we start breaking 4-hour demand zones to the downside, then I'll be looking for shorts for sure. So this is a pivotal area in my view. Okay, so let's see what we can get. I hope you trade safely, and check out my other videos that I just released for the outlook for this week, especially with EURUSD. All right, you want to check those out? I'll leave it on your screen right now. I'll see you later.